just mentioned, I look after the Gulf banking team, where we rate sort of 60 banks, both conventional and Islamic, as well as banks in Turkey and Malaysia. So a few minutes of opening comments before I sort of get into the actual panel session. So for those of you that don't know, and that's probably very few, the actual principles at its ideal of Islamic finance is actually equity finance. So, you know, if you don't sort of understand anything about Islamic finance, it's the principles of equity, risk and profit sharing that drive a lot of the complexity of that industry. And the Islamic finance has a lot of traction in many different markets. Malaysia is leading. Turkey is sort of coming up, but Turkey, they call it participation finance. Again, participation reflects the underlying sort of ethical characteristics of what it should be about. Also, Islamic finance encourages asset-backed financing rather than just pure debt financing. So again, this in theory should control debt, should control leverage, and also within the principles, social responsible investing, ethical investing. So these are all good concepts, but this is kind of contrary to global trends. If we look at the level of debt in the last 5 years, 6 years, 57 trillion of debt added globally, debt to GDP globally going from around 270% to 300% of GDP. So it's well acknowledged that excessive debt is a drag on growth, increases vulnerability to crises, as well as there are some studies out there that say growth in debt markets actually has a weaker impact on economic growth than growth in equity markets. So Islamic finance is meant to focus on these equity principles that, even beyond the religious sort of observance, actually has some economic underpinnings as to why it could be beneficial for the economy and society as a whole. However, Islamic finance as it's practiced today is still quite far from that ideal. As with all things, it's the market that wins out, and the market wants credit instruments, the market wants debt-type institutions. And so there is a tension within the industry between these principles of Islamic finance on the one hand and the needs of the market on the other, and where they come together is currently where the industry stands today. But there are some nonetheless, some very strong growth metrics. I mean, total assets around 1.5 trillion. Banks are growing at around 25-30% a year, but this is admittedly from a low base when you compare to the conventional industry. And just to close, I mean, 2014, in my mind, was actually a landmark year for the industry, where initially Islamic finance was really the preserve of Muslim-majority countries, so again, Malaysia, Indonesia, Turkey, the Gulf, etc. But last year you saw the UK, Republic of South Africa, Hong Kong, Luxembourg, Goldman Sachs. So these are all countries with limited or no sort of Islamic affiliation, yet they are being drawn into this market because of the growth trends and because of some of the more the increased linkages they want to create with emerging market countries. And that was what drove a lot of David Cameron's speech that he gave when he announced that the UK was going to participate in this market. So with no further sort of comments, I'm going to introduce my panel. We have Atif Hanif, partner and head of Islamic finance at Allen & Overy. We then have Usman Hayat, content director of the CFA Institute. We then have Mohammad Khan, partner and UK Islamic finance leader at PricewaterhouseCoopers. And finally, but not least, Dr. Dominic Selwood, General Counsel and Chief Compliance Officer of Arab Asset Management. Gentlemen, thank you for your time. I guess my first question to you really is about the growth of the sector. You know, this pops up in the FT every sort of third day, or The Economist. The actual size of the market isn't that large, but still it's growing at a rapid rate. So if I can maybe start with you, Atif, in terms of why you think that the sector is sort of growing so fast. What are the drivers for this, and where you think things are going?
Thank you, Khalid. I think it's, when you look at the Islamic finance market, it's probably best to drill down a little bit from the overall market and look at the individual segments or the key market segments within that. One of the things that a lot of you, I think, would have come across, and you alluded to in your opening remarks, is the Sukuk market. And there's a lot of action in the Sukuk market. The UK has issued a Sukuk, South Africa issued a Sukuk, and various other countries have done as well, both in the Islamic world and outside. So in that market, the growth prospects look pretty good from what we can see. And a lot of that is driven by the institutional investors that are there in the Islamic markets who are interested in investing into new markets, into new kinds of paper and taking on new kinds of risk. And that's driving that growth. So we see that as a trend that will continue. The other segment that's worth looking at is the retail banking market. And a lot of the growth that is being fueled in the Islamic world is certainly in the retail space. I mean, it doesn't get the same headlines or the same attention as the Sukuk market does, but that's where the growth is coming from. And that's really largely a feature of the sort of preferences of the local population in various Islamic countries to opt for products and solutions that are in compliance with their religious beliefs. And now that you have this alternative available to you, and in most of these countries it's quite a credible alternative, you see a lot more people switching in from their conventional banking relationships into Islamic banks. So places like the Gulf, places like Malaysia, for example, that's where you see a lot of growth. It's something that we think will probably get replicated in a lot of other countries where traditionally there hasn't been any Islamic banking. So North Africa is one example. Traditionally there wasn't much in terms of choice for consumers in that region when it came to Islamic banking and finance, and now that's changing, and you see some of that growth being driven by Gulf-based Islamic banks investing and taking positions into North Africa. So that's another area that we see for growth. Then there's the corporate banking segment, which kind of exists between the Sukuk and the retail segment. There, I think although we are seeing growth there as well, but the drivers for that are quite different. The drivers for that seem to depend on which jurisdiction the corporate is operating in and where the corporate banking services are being provided. So if you take Malaysian example, where there's been an explosion of growth in the last decade, a lot of it is also down to the fact that the government in Malaysia has made it a stated policy objective to encourage Islamic finance. So you get tax breaks, you get tax incentives if you as a company go into the Islamic banking segment and raise financing in that sector. So you see a lot of growth coming in from in that market by virtue of the way the state has effectively geared the market in favor of the Islamic banking institutions. Then in other places like the Gulf, you have a combination of factors. One is increasingly we are seeing some traditional, let's say, merchant families that wanted to do business in a Sharia compliant manner now coming out and being more outward focused and trying to then use the services of corporate banks and corporate banking advisors, and again demanding that they be provided in a Sharia compliant manner. Then there are other companies which are looking for arbitrage between the two sectors. They look at conventional and they look at Islamic banking and they see, well, where can we get the best deal? So wherever they get the best deal, they'll go for that. So there isn't kind of a uniform reason behind why that sector is growing, but on the back of the growth on the retail side, because there are more deposits available to the Islamic banks to deploy for their corporate banking services, you then see that growth feeding in to the corporate banking.
No, I mean, from our side, broadly the retail banks in Islamic space are growing at 50 to 100% faster than the conventional, so those are real hard numbers. But it's from a low base. And as they grow, their balance sheets get bigger, and then they become a bigger demand factor in the market. And that's the sort of retail phenomenon you've described. And then there's the top-down, and Usman or Mohammed.
Yeah, just a quick comment to add to it. I think if we look at the total industry size, so the Islamic Financial Services Board, last year they published a report on Islamic finance stability, the industry stability. And they very clearly say that the total industry side is about 1.8 trillion. So the global Islamic finance assets are about 1.8 trillion. And if you look at the balance sheets of some of the largest conventional banks, they often top 2 trillion. So what we're essentially saying is the industry, the global Islamic finance industry, the asset base is still smaller than the assets on the balance sheet of one bank. So that's why it's important to kind of keep in mind that it's really about a growth. It's the growth that attracts people to the Islamic finance industry. And the growth has been in double digits. You can look at various estimates, but where the estimates, the common thing that they share is that it's in double digits and people still expecting, things will continue the same way.
I think also the other thing to add, because I meet investors into the Middle East Sukuk market. And especially here in London, these are not Sharia compliant investors, but what they are interested in is emerging market exposure in Gulf countries, in Indonesia, in Malaysia. And because those countries have taken a view to issue in the Sukuk format, you have the conventional investor base sort of being pulled into that market, and then that sort of helps to globalize that. But I want to think, we've sort of seen this high growth, these metrics that we all acknowledge. But what are the sort of challenges that we see within the sector? I mean, are there any problems in the sector? Is it just a positive story, or are there things that are actually inhibiting the growth? And perhaps, Mohammed, we could start.
I think the challenges are probably the same challenges that we've kind of been talking about sort of for the last 4 to 5 years. So if you look at where the growth is based, actually Usman touched on this, the growth is in Muslim majority countries, and that in of itself is not an issue. There is still a huge amount of growth potential left. I mean, you commented before that we're starting off a very low base, and actually even if you look at financial services themselves, let's say in the Middle East, and you look at relative penetration rates of, I don't know, retail banking, retail insurance, even commercial wholesale banking and wholesale insurance, it's still a lot lower than in other more developed economies, or even economies with a similar GDP per capita. So there's still a huge opportunity for growth there. We often talk, and I know we'll probably cover this a bit later, about Islamic finance in Europe. You mentioned that 2014 was a landmark year because we had Sukuks in South Africa and in the UK and in Hong Kong. I think if you're looking at the retail side, I think one of the biggest challenges is, can we see Islamic finance products being offered to Muslims in Muslim minority countries? And there I think it's a lot more patchy. But actually, I don't think it's about the Islam or the non-Islamic bit. I think it's actually about service levels. So if you look at retail within, say, the Middle East, I think one of the reasons it's taken off is clearly people are expressing a judgment as to their personal religious beliefs. But I think another point is actually, it's not often talked about, is if you look at service levels in Islamic banks, they have rapidly caught up, if not gone further, than conventional banks. They're actually competing on a like-for-like basis. And if you look at most customer preferences, whether Muslim or not, people generally want the same thing. If I want to go to a bank, I want to make sure that my salary's paid in, my bills are paid out. If I phone up or I go to the counter, I want to be treated fairly, and actually I want good service, and if I want to take money out, it's done in an efficient manner. It doesn't sound like rocket science, but if you look at some Islamic banks, both in the Far East and the Middle East in the past, sort of 5 to 10 years ago, service levels were not at the same level. They've caught up, hey presto, the growth occurs. So I think on the retail side, that's the biggest challenge. On the wholesale side, we've talked about the Sukuk market. I think that will continue. One of the things that I think is that would really fuel the growth actually is at the moment a lot of the Sukuks are, and a lot of the Islamic finance instruments are what I would call one-off. It's not really a commodity yet. It's not very easy to translate it into a commodity type product. I think if we can start doing that, then we can start to get secondary markets going. And if you start getting that level of liquidity, then you'll see the rise of products like that.
It's a very liquid market.
Yeah.
You're right about that. I mean, the traditional investors have basically bought the paper and held it to maturity. That's the challenge around developing the secondary market, is to move away from that investor behavior.
No, I mean, one of the issues is that Islamic banks are actually some of the biggest buyers of these instruments, but under the incoming regulations of Basel III, banks have to hold liquid assets. Looking at what happened during the crisis, it was a liquidity crisis that started and turned into a solvency crisis. Mm-hmm. And so the shortage of these instruments means that as soon as you get your hands on one of these instruments, you don't sell it. And there is no secondary market, and there's illiquid trading, and as you say, that affects investor demand. So it's actually interesting. There's a new sort of supranational that's been created, the International Islamic Liquidity Management Corporation in Malaysia. 9 central banks, countries getting together trying to solve a problem. Usually takes them decades if ever they solve anything. But 9 central banks in the space of about 3 or 4 years have come together, created a new institution which purely issues short-term Sukuk, so that Islamic banks can buy it to manage their liquidity, and hopefully that will allow them to bypass a bit that problem. Any other sort of challenges or problems within the industry, perhaps? Dominic, I don't know. You have any thoughts?
Well, I think possibly that we can take the word challenge and we can inflate it a bit and say, what about criticisms of the industry? Because in a way, those are our challenges. When people criticize us and say, well, why are you doing it this way? Why haven't you found another way of doing it? And for people who are sort of long-term observers or long-term participants in this industry, I think the biggest thing that they wrestle with is that over the last 14, 15 years, there's been this phenomenal growth. There's been a huge amount of optimism and aspirationalism, but at the same time, without wishing to be too controversial, I think there's also been a sort of a failure to deliver a vision. And that there are a number of factors that feed into that. One is, I think, for so long as so many people try and replicate conventional banking, they're doing conventional banking with one hand tied behind their back, because, of course, there are these additional constraints. And that leads to lower performance, which even though the risk participation might be something they want, the performance isn't as good, the cost is high, it doesn't make sense. So trying to take on conventional banks in an Islamic way is inherently problematic. Secondly, I think because the identity has been so strongly Islamic, that's kept it largely regional, and this is something that we've been touching on earlier, which means that within Muslim-majority countries, there is increasing and very exciting traction. But outside of Muslim-majority countries, and if you look at the story in the UK, for example, it's actually quite a sad story of these institutions that people had a lot of hopes for, and they haven't really quite delivered on them, and many of them have faced problems. So for me, that comes back to, what is the identity? What is it that makes Islamic banking different? Why should everybody get excited about it? And for me, it's like going to eat on the Edgware Road. There's nobody at the door saying, are you Muslim, are you Christian, are you Japanese? No, you can't come in. I mean, it's falafel, it tastes good, go in and enjoy it. And that's what Islamic finance has to offer. And that's what Islamic finance does offer. I mean, the products that are now out there, have wonderful prudence built into them that the world really wants and frankly needs. And as we've seen through the finance crisis, there is a definite desire amongst people. I mean, even the Vatican's official newspaper has said, everybody wake up, Islamic finance has got some very, very realistic things in there that we should all take notice of. So, for my money, we have to try and broaden Islamic finance. Keeping it in a niche has kept it pretty static. I mean, I know it's gone from under $1 trillion to over $1 trillion to 1.8 trillion, but in 14, 15 years, that's not what it was anticipated to do. I think the way we get it even bigger is by finding, well, what is its identity? And for me, that's very clear. At the moment, we have a very rules-based Islamic finance. We say, you can do this, you can't do that. You must not look at these industries, you must observe the following ratios. It's very clear, you can tabulate it, you can chart it. But where's the kind of soul in that? Where are the people? Where's society? For me, ESG, sustainability, a social aspect to it, saying this thing has to work for society. This makes things work better. This means we're investing in companies that don't damage the environment, that don't abuse labor, that don't, make their profits on the back of corruption. These are values that everybody now increasingly aspires to. You look at the number of people who've signed up to the UN Principles on Responsible Investment. I mean, it's $36 trillion worth of assets in the world. They're doing nothing other than Islamic finance in many ways. They're saying, can we just be responsible about the way we do this? And Islamic finance is a way to do that. So for me, I just think we need to broaden the vision away from rules and scholars and the kind of basic products we've got. And we have to say, this is finance for a healthy society.
Usman, do you share Dominic's vision of...
I do, and I think if you look at the criticism of Islamic finance industry over the years, there's really only one debate that's going on, which we call the form versus substance debate. And people are really saying that if first you said that conventional is not okay because there are certain Islamic restrictions in place, and then you actually go on and replicate the same conventional finance in its substance, changing its legal form. So is it really good enough? And I think as Dominic said, apparently, some people think it is and some people think it is not. But what I think a lot of people expect but hasn't quite been delivered is the ESG part of it, is the social benefit side of it. So there's a lot of credit given to Islamic finance, and rightly so, for excluding certain industries. I mean, for instance, if you live in a certain street in London and you find certain shops, let's say gambling shops, there are too many of them opening in the streets, you can be sure that at least your Islamic bank is not channeling your deposits to this kind of a business. And for a lot of people, this is important. But I think where people want to see Islamic finance is more into the social impact space, I mean, social impact actually went up all the way to the G8 agenda. Islamic finance never did. But so I think we have to adopt some of the good practices, such as social impact bonds or whatever else, to actually make a positive difference and not confine ourselves to, we don't finance alcohol, tobacco, and gambling. So there is a challenge.
I think you've got another problem as well, which is that, and we shouldn't shy away from it. When you say Islamic finance, people focus on the word Islamic, then they focus on the word Islamic, then they focus on Islamic terrorism, and then they focus on the fact that if you're doing these things, you're actually funding some nutter that's going to go and blow up a plane. So, look, I mean, let's not shy away from it. If we're thinking about Europe and we're thinking about the UK, that's something you need to think about. And let's deal with it head on. Islamic finance is not about that. It is not a separate set of laws. If you operate in the UK, if you operate in France, you have to be regulated by the French or the UK authorities. You're not getting a step up or a step down. You're just playing on a playing field. I do agree, actually, with your point about if you're trying to play conventional banking with Islamic finance, you've got one hand behind your back because of the impositions imposed by Islamic finance. I actually agree with Usman as well. But I mean, I think the one thing that Islamic finance has not done in Europe and has not done successfully is said, this is what we're offering. It comes back to your point about the sold, but I think it's even more so. It's you as a customer should want to buy my product because it's ethical, because we have an external committee every year that looks at it to make sure it's ethical. We call it Sharia committee, but actually that's what they're doing. And look, if you don't believe us, go and look it up because it's in the annual accounts. There's basically an ethical audit that's done by 3 people who are completely independent of the organisation. So we don't talk about that. What we focus on is 2 main things. One, it's Islamic, so we've got to aim it at Muslims. Or 2, is it really Islamic? Can I prove that it's Islamic? And actually, it's completely the wrong argument. It should be about, is it organic butter or normal butter? That's what you're going for. You want what you actually want is consumers saying, I want this kind of product. Where can I go to get it? Oh, look, I can go to that bank. The fact it happens to be an Islamic bank should be irrelevant.
So, just a quick comment, if I can add to it very briefly. So, if you look at the world's largest equity fund, where do you think it would be? You think it would be in Saudi? Would you think it would be in Malaysia? But it's actually in US, and it's called the Amana funds. And why are the largest Islamic equity funds in the US? So their principal portfolio manager is the CFA charter holder, and we interviewed him and we asked him, are you getting Islamic investors? And he said no. The dominant majority of our investors, we know it for a fact, are not Muslims. What they care about is our financial performance, one, and the performance is good. And then we have these ethical screens, and nobody has a problem with it. So you have the largest Islamic equity fund in the US being very successful, overcoming some of the perception problems. Why? Because they're offering a genuine value proposition.
I mean, I just want to pick up on that. That's actually the really exciting part of why this story works. Because if, for example, you take a global equity portfolio, if you do strip out all the things that breach for example, the ILFE balance sheet screening requirements, okay, you're taking out companies that on the whole are imprudently run in a variety of ways. They've got too much cash hanging around, their leverage is all back to front, they're not running themselves in a sensible way in terms of managing their debt and their cash. Right? Then you take out the industry screens. So you're taking out a lot of very high-risk industries. Now, we know that there's the Vice Fund out there, which invests only in alcohol, tobacco, gambling, weapons, and so that's a particular risk profile, and sometimes they do well and sometimes they don't. But actually, the Islamic things, if you take a lot of these things out, there's a reason why the Islamic indices perform better than conventional indices. And that is because actually you're creating a better investment opportunity that delivers stronger results. So in a way, we don't have to sell Islamic finance. If people would get beyond the word Islamic and actually see that these rules lead to, as long as it's done thoughtfully, better performance, it shouldn't be an issue for wider communities to say, as you were saying with the Amana Fund, to say, this makes sense for me. I really like the social aspect of it, and I really like the fact that it performs better than anything anyone else is offering me.
So we heard the phrase form over substance, and we have a lawyer here on the panel. I don't know, what's your view of the industry? And if I look at a lot of the structures, a lot of it is legal form and perhaps a different substance. I don't know if you can offer commentary on that.
I think, one of the things that you have to appreciate is that when you've got a dominant incumbent conventional industry, and you're about to offer an alternative, the rules of the game will still be set by the dominant industry, and it will take time for Islamic finance and the scholars to come with structures which are truly unique. So there is an element of that, I think, in the day-to-day things that we do, where the form is different, but the substance may not be that different. But I think certainly from where I sit, we are seeing an evolution where people are moving away from some of the more transparently, what I would call the Sharia-wrapped structures as opposed to really being Sharia-compliant structures. So there's certainly a move away from that into something that is more true to, I guess, the spirit and the purpose behind Islamic finance. But that is a process that will take time. And the reason it will take time, I think, is because you are starting from a proposition that people need to have conventional banking services, and what we are trying to provide is an alternative to that. But it's actually not really a true alternative, in some cases just mimicking what the conventional industry is doing, but trying to wrap it in a different way.
Yeah, no, I'd agree with that. I think one of the I'll call it failures, just because let's be controversial about it. I think one of the failures of Islamic banks in Muslim minority countries has been that what they haven't done is actually said, okay, we should focus on a particular niche. Now, it could be mid-market, it could be large companies, it could be small companies. And what they should have said is to themselves, what do we think our customers want? Instead of what are the conventional products out there, and let's mimic them, what do we think our customers want? Now, it may well be that what our customers want is exactly what the conventional products provide. But it might also be that actually what they want is something different. They might want a different set of cash flows, they might want some screens, they might want board governance, I don't know. That's what they should really be thinking about. And then they should be approaching those companies and going, by the way, did you know that I can offer you this?
No, I can comment because Moody's, we rate debt. We don't rate equity. And banks, we rate banks, and banks are lending institutions. So when we analyze a Sukuk or when we analyze an Islamic bank, guess what? We actually are applying the same methodology, because a bank has deposits, it lends. Islamic banks are taking deposits but are charging profit as opposed to interest. So there's a form over substance. Sukuk instruments, in theory, there's a property or a land asset backing that instrument, but ultimately with a series of back-to-back contracts, you get back to a debt type instrument. And as you say, it's the conventional market that drives the form of this. I think the sort of I don't know, the silver lining or the hope that I see for the future is, up until this market existed, nobody was even talking about Islamic finance or those underlying principles of ethical investments, of profit sharing, risk sharing, and all those things that I actually genuinely believe, if you were to practice these principles, I think you would definitely improve the values in society. This is a big stretch, but the gap between rich and poor, a lot of it for me is related to excessive debt. People buying things they can't afford with money that they don't have. If you have more equity type principles, nobody's going to finance you to buy that plasma TV, because you can't generate some kind of economic return from that asset. So the principles are sound. And now that you have this huge industry that everybody's looking at, you've now got that platform to say, okay, well, we've got to this stage. These are the principles. So if you're one of the minority that wants to focus on that, you can kind of go off in your own direction with that traction. And so the issue, though, that I do have is that because it's so complex, it's often quite difficult to work out who is practicing Islamic finance and who isn't. And the Islamic banks in the Middle East, they are making a lot of money. They're highly profitable by exactly replicating conventional banking. The margins are good, it's intermediation, there's no fancy derivatives or prop trading. An Islamic charge card works by front-loading your interest at 40%. So is the Islamic consumer genuinely better off when you charge him sort of 40% interest up front as a flat fee, but whether you borrow or not, you still have to pay that fee? So it's not interest per se, but in calculating the fee on the card, you've just reverse engineered what would have happened had they borrowed the maximum balance. So that, for me, it's completely going in the wrong direction. It actually puts the Islamic customer at a disadvantage vis-a-vis the conventional. And here I am, global head of Islamic finance, paying off my car loan, in advance, and I didn't realize it was HSBC. And I thought it was HSBC that had given me the subsidiary of the Islamic contract. I should have paid attention. And even if I prepaid, I still, because they'd front-loaded the interest as a charge, it didn't actually reduce the amount that I had to pay. So really, within the Middle East, it makes money, and it's money and profit that drives it. But I see now traction for these principles. People like yourselves and people saying, well, okay, we've got to this stage. How can we take it further? And that's when Malaysia is actually quite far ahead in saying, okay, we've got here. We want to make banks much more like investment institutions and try to send money towards economic investment purposes. And so I think for me, this is the biggest issue in the industry, and it's something that will be tackled as we go forward.
So what I extract from what you say is that the products where we replicate the conventional industry most, which is the Sukuk, is the most successful. That's why we see it as the headline instrument all the time. And that's also why, when you look at the subscriber lists, the vast majority of people who subscribe to them are conventional buyers. So in a way, that's great. It's what we're talking about. Islamic finance needs to have a wider audience. But there's also a sad story underpinning that as well, which is that, away from the Sukuk, and if you actually look at the other Islamic products, they haven't yet been built in such a way as to convince the vast majority of Muslim investors who don't bank Islamically or who don't use Islamic products, because they're not convinced that these actually deliver what they say they deliver. And that's a huge challenge.
Well, let's comment a bit on the gatekeepers of Islamic finance. Ostensibly, within a banking institution or within a fund, you have what is called a Sharia board. So, members who are there to look at the structures and to give their opinion or fatwas as to whether or not these instruments are compliant with these ethical principles. And some of them almost gain celebrity status in that they can make or break a transaction if they give their approval. And if they don't, well, certain demographics won't buy that. I don't know, Dominic, whether you have a view on these participants and their role within the architecture of Islamic finance.
Well, I think, it's a very controversial topic in all sorts of ways. It's hard to say anything without being controversial about scholars. But what's interesting is if you look at the history of it, if you go back to before 1978, when Faisal Bank actually invented the idea of bringing scholars into finance. And they did it, let's be really candid among ourselves, they did it because they thought it would help them sell their products, because they would be able to show, some scholars have endorsed this, therefore this is a good product, therefore it's suitable for consumption. But actually, until that moment, people made decisions about finance in the same way they make decisions about all sorts of other areas of their life without necessarily having a fatwa underpinning it or justifying it. So, one of my questions is, why has this come to dominate the industry so hugely? And that's something that we don't often hear debated, but I think it's a genuine question to pose. The argument that we normally hear much more about is actually how should they be organized. So it kind of accepts that they're there and their role is important, but it says should they be individual, freelance, rather like auditors, how do we manage their conflicts? Should there be boards for individual countries that actually regulate at a national level? And that really is where the debate, is now, following the Malaysian example and what's happening over in the UAE.
I was told once they saw themselves as a form of rating agency as a comparison, but then I drew the analogy, if you had to pay me, Khalid, Howladar, $100,000 for my fatwa opinion, as honest and as standards of integrity that I practice that I have, if my livelihood or function depended on me approving yes or no, then the scholars who are liberal and let's call them pragmatists, would find much more traction, whereas the ones who were conservative and didn't sign off on anything would actually find themselves out of business in very short order. So I think there is an issue with the structure of the whole approval process.
I think
that it should be institutional, and for me as Moody's, following the crisis, we have to document our decisions. Regulators can pull those documents: who voted, how they voted, what happened. Did we really debate it and come to a genuine consensus conclusion, or was it one person rubber stamping? So we have that accountability now. So people have, I hope, more faith in the rating agency process. But please,
I think that's the central debate that's going on in the industry is, the conflict of interest point. That on the one hand, you are meant to be the gatekeepers when it comes to compliance with Sharia rules, but on the other hand, you are being paid by the person who is asking you to pass judgment on their product and services. And the more you reject, the less likely you will be invited back to do that. So there is that central tension. And it's something that I think the industry really needs to resolve for people to really have confidence in that, all of the decisions that are being done and made are being done purely for ethical reasons and for Sharia compliance reasons, and there are no other considerations polluting that.
Yeah, just a quick comment on that. So I think, as was rightly pointed out, it's a big debate in the industry that there's a conflict of interest, more than one form of conflict of interest in Sharia governance. But I think at the same time, we have to be aware that we might be exaggerating the role and the influence of the Sharia scholars. For instance, and you can take to them a debt product and you can get a favorable ruling, and you can take to them an equity or risk sharing product and you get a favorable ruling. So why is it that bankers continue to take the debt-based products and get the favorable ruling? And I think that's because, as was earlier pointed out, because the overall system is based on debt. It's much more profitable, it's much easier to replicate the debt-based products. And you can actually, if you make an equity-based product, I'm not sure that you will be declined a fatwa. It's just that that's what you don't want that. You want the debt-based product for the business reason.
But the question then is that should the scholars then take the view that actually it's in the interest of the Islamic finance industry not to have too many debt products, and I will stop approving the debt products, despite the fact that the bankers are keen to push it. That's, I think the next debate that's taking place in the industry is why is that not happening?
Yeah, no, but I think there's if I can come back to your point, Dominic, I think it's quite interesting, isn't it? So I think if you look at the retail space as an example, one of the thoughts I've always had is one of the reasons why we have a Sharia board is because people might not understand the product. But actually in a retail space, if you don't understand the product, maybe you shouldn't be there. Just from a risk appetite perspective, do we want, I'll say Mohammed public rather than Joe public, buying a product that they don't understand and they're having to rely on somebody else? And I do think that's another problem that the industry has to solve. We've talked about, why don't we sell more, etc., in Western markets, but actually, irrespective of that, the products now generally are so complicated that actually you do need someone to look at it,
Sure.
To say, is it Islamic or not? Because actually, we're not sure, depending on how it works. And actually, is that the best thing for the industry? I'm not sure it is.
Conscious of time and would like to leave some questions for Q&A, but each of you, 60 seconds, what do you think is the next few years for Islamic finance? I'll start with you, Atif.
Okay, I'll go first. I think, it's certainly no longer, I think, a niche product. It's something that is becoming more mainstream. It is now much more well known outside of traditional markets. There's certainly a lot of growth and momentum behind it. So, projecting forward 5 to 10 years, I see that increasingly within the Islamic world, the Islamic banks or participation banks or whatever label you want to give them will start to dominate, and in some cases are already dominating the banking space at the retail level. I see that also,
60 seconds.
happening in the corporate banking sphere. The other thing that I think will happen is, the Sukuk market will carry on in the trajectory that it's going, but my fear is that at some point there will be a bottleneck, and one of the bottlenecks is potentially the whole issue of Sharia governance and the development of Sharia rules and how you harmonize that across jurisdictions. I think that's going to be the big challenge.
Usman?
Okay, I think if we look back at the industry, we see two constants. One is growth, and the other is debate about form versus substance. And a lot of people thought that eventually the form versus substance debate will catch up with the industry and slow down its growth. It hasn't happened. And then people thought that the industry will, once it will grow a lot, the form versus substance debate will die down, and that hasn't happened either. So I think going forward, I think the growth and the debate will continue, and people would very much like to see Islamic finance offering more risk-sharing products with a genuine social value proposition.
Mohammed?
I think in the next 5 years, I think it's clear, right? We will continue to see growth in Muslim majority countries. I think the interesting part is actually after those 5 years. So if you look 5 to 10, 5 to 15, I think the key thing that whether the growth will continue will depend on two things. One, can Islamic finance market itself in non-Muslim majority countries? And actually two, come back to your point, Dominic, can it find its soul, or can it start to offer other products? Can it start to meet other customer needs? Otherwise, it will just find itself at the peak in countries where it can no longer grow.
Dominic?
I think what I would like to see is a move away from Sukuk and Takaful and a proper focus of people's real brain power on how to develop risk-sharing, equity-based products that work and that deliver and that people can rely on. And secondly, I think that in a post-finance crisis world, we're going to see a much bigger call for an injection of the environmental, social, governmental, anti-corruption, for these more social issues to become a part of the mainstream Islamic agenda.
Great. Rami, do we have time for questions? Or?
My question is, while you have talking about Sharia compliance, as a customer, how would I know whether the loan that you are providing to me is Sharia compliant? What is the benchmark for me as a customer to look at it and say, yes, I am buying a product that is Sharia compliant?
Well, I'll start with a quick answer. I mean, the first thing is everybody has their own opinion. I mean, there's a plurality in Islam, and that's inherent. You can't actually, there's no de facto compliance standard. So, you can absolve that responsibility and say this institution, Al-Rajhi, for example, is known to be very conservative, vis-a-vis perhaps another Islamic bank. But I don't know if anybody else.
Just one quick comment that in my experience, talking to retail customers, I found what they really feel comfortable with if they know someone at the Sharia board and they think, oh, we know that guy, we trust that guy, and that's good enough. We can't get into the technicalities of Islamic commercial jurisprudence. People generally have no idea.
One of the key themes that came out was that it's on the back of conventional banking. I think one of the reasons for that is that it's a lot of commercial bankers who've moved into the Islamic finance space, and it's their experience that is sort of driving some of the policies there, some of the products there. Do you feel that there is a lack of talent development or education or training? And what do you think is needed to manage the capacity for growing this business?
So I would agree with you in one sense, and I'll disagree with you with another. So we'll start with the disagreement. The reason why Islamic finance products follow conventional products is the reason why conventional products are sold. It's because that's what the customer wants. So if you want to change the Islamic finance products that you offer, you actually have to understand what your customer wants. Now, in a world where, let's face it, it's still pretty capital constrained out there, if you're the CEO, CFO, and you're on the board and you have a choice, you can either go talk to your customer, spend time trying to understand their needs, and spend time developing a new product, or you can develop a similar product and sell it and know that you're going to make the return. And we've heard some of the returns from our chairperson. I mean, 40% isn't to be sniffed at. You know which one you're going to go for. So, I mean, my personal perspective, it's kind of similar to what we talk about in terms of what we see for the next 5 years. Look, make your money. These things, institutions have to be profitable. The Islamic finance institutions aren't going to be profitable. We won't have an Islamic finance industry. But as we become profitable, as we become more profitable, let's ask ourselves, what do our customers need? And then let's say, how can we meet that? And actually, with the Islamic finance backgrounds that a lot of people have, they can develop new products. I mean, you do see this. So in Saudi Arabia, for example, actually within Takaful, they've developed products in terms of inheritance. So usually if you look at, I will defer to Atif on this one actually, but usually my understanding is that, in terms of inheritance, you have to give it to all of your children. So say you want to actually give it to your daughter to pay for her school fees, and she's 7 now, and you actually want to give a set amount of money so that if you died tomorrow, she would be able to go to university and maybe do a master's and maybe even go on to do a PhD. We have that product within Takaful. We don't have that in conventional. Why? Because there's demand for that in Saudi Arabia. So we're already seeing it happen. It's happening slowly. It's not being publicised, but it will happen. In terms of talent development, I do think it is an issue, but actually a lot of the people who are moving across into Islamic finance, you see some of them here, are actually quite smart.
I mean, sadly, I do agree with Mohammed in the sense that yes, there's a human capital element, but it's a top-down phenomena. And as the bank, they are looking to replicate a bank, so they don't need people with equity investment skills or structuring skills to create these products. But I think what the issue is that Muslim customer who does want that type of instrument actually cannot differentiate, and there isn't an institution out there that does try to differentiate and says, actually, we're offering this type of product that is more of an equity type product, but then it's more risk. So Malaysia, as I mentioned before, it has these bank-type structures, but the past Islamic Financial Services Act that says, okay, these types of instruments that you're calling profit sharing, actually, they're acting like deposits. You have to find something else. If you call it profit sharing, put a big red sticker. These ones are going to be your investment-type instruments, and then as a customer, you can then say, well, actually, yes, I want this type of product. So you give the consumer the ability to choose. And at the moment, that's completely absent within the Islamic banking space. There's no real differentiation, and there's no real money at the moment in behaving more like an ethical investment-based institution rather than a conventional bank. I think we've got time for one last question.
The question I've got is really in respect to certification, standardization of the certification of the Sharia compliance. In the absence of standard measures, we're always going to be open to conventional banking performance motivations, profit, returns, financial. Are you aware of any initiatives globally that are looking to standardize the principles so one particular scholar that signs off on something can't be overruled by another particular scholar, or the whole function being taken in-house and then really losing the principle-based fundamentals of Islamic finance and just becoming another asset class that's traded with no real understanding?
I think Islamic Financial Services Board is, they've done the work which is closest to, in my mind, what you're suggesting. There's a publication by them, Principles of Sharia Governance, and they really talk about the governance around it. But regarding the specifics of Sharia, I don't think there has been any standardization, or nobody actually foresees any in the near future either.
I mean, the market is demanding that, it wants that, but ultimately, again, there's a lot of agency conflicts. If you standardize things, you reduce the scope to make profit and charge margins. It becomes a very commoditized product. So if there's one scholar that can issue a fatwa that's approved for everything, well then all the other 59 transactions don't need a fatwa. So there's a lot of agency conflicts, but I think, sorry.
But there, I think there's also a fundamental issue behind it, and you alluded to that earlier about the plurality of views in the Islamic world. We don't have, for those of you who perhaps don't understand the background to it, you don't have one set of rules that everybody agrees to. I mean, there are general principles that everybody agrees to, but the detailed application depends on which school of thought and which branch of Islam you follow. And that is not something that's going to converge anytime soon, whether it's Islamic finance or just anything else involving religion.
No, there is no pope
in
Islam.
No.